Other moves coming in from markets globally, but with that, let's also take a look at what's happening in the world of crude. Rather volatile day for crude yesterday because crude oil futures fell for a second day yesterday as US crude stockpiles rose, but however, they managed to recover later. Now, WTI managed to hold on to those 81.8 levels, so 0.6% uptick coming over there as well. Brent also comfortably above that $85 per barrel mark at $86.5. So, while holding on to those gains is Brent as well, 0.5% uptick on that front too. Now, US commercial crude stockpiles, which exclude the Strategic Petroleum Reserve, rose by 3.2 million barrels for the week ended March 22. This is according to the Energy Information Administration, which is the EIA. Now, gasoline inventories rose by 1.3 million barrels. Domestic crude production was unchanged at 13.1 million barrels per day, and products supplied to the market to a proxy for demand fell by 100,000 barrels. So WTI has gained 13.5% for the year, and when you also look at Brent, what it has done for a year-to-date basis, it is up 11.7%. Pardon me, not year-to-date, for the financial year basis. This is what Brent has been clocking in. But with that, let's also shift focus and talk about gold, because gold prices gained on Wednesday as investors awaited a key US inflation data later this week, which could provide more clues on the Fed Reserve's policy path. Now, spot gold was up 0.5% at 2,209 per ounce, but managed to slip slightly after that, but a nominal downtick, not much to worry about. And the US Core Personal Consumption Expenditure Price Index, which is the PCE, that is due for the month of February, that is due tomorrow. So the index, remember, had risen 0.3% in January, so we'll be watching out for that piece of data as well. But with that, Shreyansi, take us through all the important cues that we need to be tracking for the last trading session of the financial year and the one before the long weekend as well.
Absolutely, like you mentioned the PCE data, but then when we're looking at domestic, the Nifty 50 and Nifty Next 50 rejig is likely to come into effect. So keep an eye on that. Nifty weekly as well as monthly expiry also will be on investors' radar. And in terms of global cues, you've got US initial jobless claims as well as GDP data coming in, and for the UK as well, there's GDP data. So keep an eye on those data sets as well. And in terms of corporate action, what will be in the spotlight is CRISIL, because that has an AGM and Persistent shares will be trading ex stock split. So keep an eye on that counter as well. Now, it's the last day to buy to be eligible for dividend for CRISIL, REC, R Systems, SBI Card, Hoodco as well. And in terms of the IPO watch, of course, there's SRM Contractors IPO that closes. So that will be in the spotlight. And in terms of other cues to track, then last day to use Section 80C tax saving provisions and T+0 settlement beta version to be launched on BSE. So those two news flows will also remain in focus. So that's largely the events that you should keep an eye on.
Well, absolutely, and the two most important highlights today on Dalal Street are going to be this Nifty rejig that is definitely going to happen today, and Shriram Finance is expected to see the highest inflows, and also the T+0 settlement cycle on BSE. Remember, this is unlike the normal trading session beginning at 9:15, and the trades for under this settlement cycle will only be ending at 1:30, and this is only for a limited 25 stocks. But let's kickstart this morning with some global news then. The US business leaders met with Chinese President Xi Jinping as Beijing aims to renew efforts to woo foreign investors and mend strained relations with the US. Now, Cristiano Amon of Qualcomm, Raj Subramaniam of FedEx, and Stephen Schwarzman of the Blackstone Group were among the few leaders who attended the meeting. The Chinese president invited US businesses to continue to invest in China and pledged further reforms to open the country's market to foreign firms.
Shifting focus to US, the US Treasury Secretary Janet Yellen, who warns against China's treatment of the global economy to dump cheaper clean energy products, suppressing prices and thereby placing US's green manufacturing capabilities. She added that the intention is to put pressure on Chinese officials about these trade practices during her upcoming visit to China.
Well, shifting focus to comments from the Fed Reserve Governor Christopher Waller, who still expects to cut rates this year but isn't ready to take a step without more signs of inflation easing. Waller's stance came in a tad bit more cautious than the central bank chairman Jerome Powell and Chicago Fed President Austin Goolsbee, both of whom have said that the fundamental story about falling inflation had not changed despite the hotter than expected readings in January as well as February.
And BlackRock founder and chairman Larry Fink says that India's fondness for gold has neither benefited the economy nor generated returns for investors, Fink emphasized the importance of capital markets and how they can improve a country's economic standing as opposed to gold. Now, what's important to note is that with the current surge in prices of the yellow metal, where is demand headed? Gold consumption in the country has consistently been the highest in the world, with the RBI purchasing 4.7 tons of gold last month, pushing the reserves to an all-time high of 817 tons.
If you like this video, then like, share and subscribe to ET Now.